Okay, I hope everyone had a good weekend. Please let me know if you can hear me and my audio is working okay. Just let me know if my audio is okay. If someone can just put in the chat that you hear me okay. Great, thank you for confirming my audio is good. Let me change my screen. We definitely had an exciting weekend, sad weekend, as you know, with Lindsey Graham's death. I guess some people are sad, some aren't, but it's for me, it's always sad when people pass away. And let me turn my camera on. I haven't been on video for a while. Okay, hope everyone's doing well out there. We are down, of course, futures. Let me make sure you can see my screen. Okay, yeah, futures are down right now. No surprise, right? The war is slowly starting to pick back up. We were in this, tit for tat. Now it's a little bit more than that at this point, and it's almost like Iran is trying to call Trump's bluff. Taco, will he taco? Will he not? And Trump is being made to be a fool, and he doesn't want to look bad and be humiliated, so he's gonna do more himself, and that's kind of where we are. So things are slowly escalating, and again, Trump has the ability to back away and diffuse the situation, but the problem is he can't control Iran. So even though Trump could, as I can say, tuck tail and leave the Middle East or just stop or just completely taco, he still needs Iran to, agree, and as well as Israel. So it's not that easy. It's going to be very messy and trying to game out how this is going to end and what the new normal looks like. But the new normal is nothing like it used to be. Okay, the new normal. We're not going back to the way it was. Okay, and I think some people still are in denial that everything is going to be a-okay. The strait will open back up. Ships will sail through there without any issue. That can be further from the truth. Okay, so we have this problem that's only going to get worse and compound until we get to a new, geopolitical equilibrium, steady state, and we're kind of not in that right now. So we have a lot going on, and of course, on that we have the Ukraine-Russia war that seems to also be getting worse in terms of Ukraine encroaching into Russian territory. That's significant escalation that may warrant a response again from Russia. So a stronger response. Okay, and that can escalate. So let's take a look at my feed. Let me pull up my feed. I always like to try to highlight different pieces of information that I think are interesting to kind of set the context. Before we jump into the charts, so you can follow me on X here. And there's my handle. You can see it. All right. So just in no particular order, what's interesting, came across this chart. If I can pull it up, let me move my picture kind of out of the way. I'll move it. Yeah, I'll make it a little smaller there. There. Okay. So put the call ratio. As you can see, it's 0.6 at the very corner here, 0.6, right? It's extremely bullish right now. Okay, historically, when we get down to these levels, the markets have been at, as you can see, major bottoms. So I really love this chart. Okay, this Ask Livermore put together. So we thank him for this information, but it only tells me what we already know. right? Everyone's bulled up. Now they'll say, no, everyone's bearish. That's what they'll say. But no, this tells you something different, okay? Uh, Now, the Strait of Hormuz, what I like about this chart here is it tells you, cuts through the noise. This is what normal looks like on your left. This is where we are today. We're not back to normal, and things started to improve, and now they're getting worse. Okay, this isn't going to do it. This isn't going to allow energy, the chemicals, the fertilizer, natural gas to get through the world needs. So just know that this is not, this isn't solving the problem. Okay, the memorandum of understanding was more about theatrics, diplomatic theatrics, to soothe the markets and push oil prices down into the 4th of July and through the summer. But we're going to slowly see that unwind, I believe, and go higher and higher into the fall. Okay, let's take a look here if there's any other. And it does seem like war is only allowed to be fought on Mondays through Fridays. It seems like, but today I guess someone is probably going to get in trouble for firing off missiles after during the futures open. But believe me, I have a feeling by Monday morning we're going to have Axios says that everyone has now all of a sudden agreed to come back and negotiate and resolve their issues, and cooler heads will prevail and the markets will pump. That's what happens every, watch 9 a.m. So we can't trade on the headlines on our channel. We have to trade our charts because the headlines are theatrics and they're used to manipulate you as a trader, as an investor, and as a market participant. Okay. I posted about oil being in a bull flag, as you can see here, and we broke out after hours. Now, we're breaking out now. If we can take out this peak, it's a clear breakout. So we're in a new trend higher. That means anybody wishing for another low, it's not going to happen. There's a debate. Is this a 4 or a 5? Well, if we take out 76, it's not no more 5. There's no 5. That's wrong. And in this, so very important in this breakout to get it to have more momentum to continue the bullish advance in energy. So that's what I will be watching tonight. All right, here's another interesting chart. U.S. Strategic Petroleum Reserves for the SPR, the United States Strategic Petroleum Reserves. They're actually, we have this in case we need it and we can't import enough oil or generate enough energy for whatever reason we need it. But we've used this to keep gas prices low for so people are comfortable. But it's just a band-aid, and it's going to create a problem later when we have to refill the reserve, and then we have to basically drill and buy more energy and create more energy. It's going to cost more, so it's going to drive the price up. The whole world is in this situation, and that's where we are. We're probably lower because this is about a week old, and at some point you can't go any further. You're not going to go to zero in this strategic reserve because it's in caverns, and you actually can't take it to zero, or you can't even store it in the cavern anymore properly, and you can research that on your own why that's the case. So we're close to the bottom, and what does that mean? It means then you have what you don't have extra supply. So that means the price should theoretically rise, or you're going to have to increase output from your oil producers. And money supply is still increasing here, as you can see, but we know they're printed money, and that's why gold and silver long term are going to be great hedges for what I think is coming. Then again, then there's a lot of back and forth about Iran in the Strait, and again, a lot of theatrics, but it seems to be slowly escalating again. This is interesting graph here. I'll pull this up. I'll read the headline. Meanwhile, retail investor cash allocations is at an extremely low level, right? Like here's one thing here. Retail investor cash allocations, right, at an extremely low level, right? And here's the SPX where we are low. There's no cash on the sidelines. That's I used to say a meme or just something that a slogan that you came up with to make you feel okay to buy in the market. There cash on the sidelines is not, it's just not there. That's what this is telling you. Okay. And let's just see if there's anything else. I showed this to my weekend update. BOJ assets are actually slowly decreasing total assets. So that means there's quantitative tightening happening. And that's going to have implications on world markets once this really gets going. Okay. Let's take a look here at margin debt. So this is an interesting chart. Net credit balance, investors' cash minus margin debt, which means margin, we haven't seen as much leveraged bets and investors using margin than we've ever seen. Okay. We've never seen. So when this bubble pops, it will deflate so fast. The margin will come out of the system so quickly, like so much pressure being released, they probably will not be able to open the market for a day or two until they figure out what to do. And this is where I keep saying the biggest risk in this market is overnight risk. That's the biggest risk, holding overnight, because they probably, when they open the market, they will not be able to open the market like they would expect, right? And because the price will be substantially below the 5% futures circuit breaker when they go to open it. So what will probably happen is they'll be forced to open it. And you could say, well, I have the circuit breakers in the indices, 7%, 10%, 20%. Well, that only works when the market is open. If the market is closed, you don't get circuit breakers. You don't get anything. You just get whatever the price happens to open up, what they can make the market at. And then as soon as that first trade hits, the computers will shut down the market if it's below one of those levels, especially if it's below 20%. And you won't be able to turn the computers on till the next day. And you can see how the anatomy of this catastrophe and what will happen when this bubble finally pops. That's how investors get trapped, where they won't be able to buy puts. You'll be under your stop loss. Most single stocks will be down 20 to 30%. And most investors that have every penny, not a cent short, not a dollar in cash, every dollar long and levered, will be lose a lot. And then triple bull funds, most of them that can't handle the volatility, will collapse like XIV did and won't open, and you'll lose everything. So everyone playing with fire in SOXL, I hope you understand the risk you're taking. You're rolling the dice every night, and I'm not going to crap out tonight. Oh, I won. Okay, great. I'll take my money. But you're not taking your money out of the casino. Let's roll. I'm on a roll. Let's roll. Let's keep rolling. One night, something's going to go wrong, and Trump won't be able to taco, and there will be no reverse Uno card that can have no one. It will just too late. The world has changed. So just be very careful, guys. Manage your risk. That's all I can say. I'm actually avoiding a lot of leverage personally. I'm staying away from any kind of leverage funds right now, given the market backdrop. So I do practice what I preach, because I'm not reckless, and I want to survive, but I still want to trade the market. And I do have a good amount of cash. Okay, a substantial amount of cash ready to go. Okay, so that's an interesting chart. And let's see what else I want to talk about that I haven't brought up. All right, I think that's that on that feed. Let me see if there's anything else I liked that I didn't cover. Sometimes I like different charts. I don't know if this is accurate, but I thought it was interesting. Social Security Fund is projected to run out in 5.5 years in 2032. Now, the reason I believe it is for the last 15 to 20 years, every article I read said in the 2030s it's going to run out. Well, guys, it's 2026. We're almost here. So that's where the debt ceiling crisis is going to come to a head. The next president is going to have to deal with that crisis. Okay, that's going to be, so we got to be really careful who you elect out there, because whoever you elect and whoever's running the government during the debt ceiling crisis, the national debt crisis, not debt ceiling, national debt crisis, when the chickens come home to roost and they got to figure out who the winners and losers, they're going to call the shots. They're going to be the shot callers. They're going to be like Bush and Obama was back in 2009 and 8, right? They're going to get to mint new institutions, close down old institutions, create new laws, emergency edicts, because people will be in such a panic and fright, they'll get whatever they want. So the next election, everyone's like, oh, this election's the most important. No, guys, the next election is the most important for the country of the United States. If you don't live in the United States, well, you don't have nothing to worry about. But if you live in the United States, you better worry about the next election, because if the country decides to elect, let's say, socialists, because that seems to be the trend right now, well, Aladdin, the stock market capitalists are going to not enjoy what's going to happen. If you elect an old baby boomer, well, maybe they'll take and tax all the young people. Maybe you elect a young leader, well, maybe they will get rid of Social Security all to begin with. Or maybe you bring in another populist president and they do something crazy with the Federal Reserve. So who knows? So you better, like I said, you don't know. And that's where I was always thought about, why didn't Trump decide to allow the market to and come in with Doge and do the right thing, and then he could have been the shot caller. He could have chosen the winners and losers, bailed out who he wanted to, and he could have really made a mark on the future of the country for the next 50 years. But he chose not to do that. He gave up on Doge. We all know the deal. He gave up on that path, and he went back to more of the status quo path. Because the pain of the markets was just too great for him. It was too much. So Trump is not going to be that guy. It's going to be the next president, next administration. We'll have to deal with that, in my opinion. Again, this is my opinion. You don't have to agree with it, but that's what I think. This is an interesting one too. Let me bring it up. This doesn't have, let me see if it has a head in, but it's the Shiller PE ratio. And we're at 42.18 here, according to this chart, and it's taken out the dot-com bubble high. So let me see if I can pull this back up again. You can't really see the bottom, but basically, we're at historic valuations, right? Where the market is not. You mean, again, some people say, oh, it's not overvalued because AI is going to bring in massive amounts of cash in earnings. But some people say, well, no, that's just financial engineering, and AI, it's just a shell game, and it's all circular financing that is creating an illusion of growth, illusion of prosperity, as left pocket goes to right pocket, right pocket, and eventually the total cash in that scheme will go to zero, go negative, and then eventually collapse. Some people believe that. Some people believe, no, the cash will come in. But we haven't seen that yet. We've seen ideas on how that could happen, but it hasn't happened yet. Okay, so anyway, but you're paying a premium valuation right now. So the market has never been more expensive. Okay, and this is another graph about asset allocations, kind of blurry, but basically. Right now, U.S. households hold 52% of their financial assets in stocks, the highest reading in 65 years of Federal Reserve data. Okay? Again, historically high. The free cash flow of hyperscalers, Amazon, Microsoft, Google, Meta, is plummeting towards zero, down from 300 billion. Okay? 300. So we know that. And see if I can make this bigger. Yeah. So this is a nosedive. They're spending a lot of money. They're betting the farm on an AI infrastructure, hardware, AI data centers. But to me, it's like a utility. It's like yes, AT&T was once a growth stock, but for the last 20 years, 30, it's not been. It's just a utility, right? So to me, these companies are transforming themselves into utilities that will probably pay a great dividend in the future, but they're not growth. And that's why these stocks are sucking wind, right? They're not the same. And of course, they're trying to change. Well, maybe we need to do something different. Meta came out with some, hey, well, here's some new ideas we're going to try to generate more cash, and investors love that. And I think that's good. And I think these hyperscalers can rally once they say, you know what, we're done spending money. Okay, we're time out. But if they keep spending money, their stock's going to be kind of under pressure, okay? Because it's just burning all their cash, and they're going to have to raise debt or dilute their shareholders to keep investing. The other issue I have is all these data centers they're building. In 3 years, a lot of technology is going to be obsolete within the data center. There's going to be faster memory, faster servers, faster connections, cut fibers and energy to power the data center, and they'll have to write off all that and then reinvest, and then that's going to be another problem. So again, first isn't always best. Perhaps Apple has it right all along because they're not caught up in that yet. Okay. Just kind of looking through the rest of it. Copper, we see in the charts is going to be pretty bullish in the future. U.S. credit card accounts are delinquent by 90 days have jumped to the highest level in 15 years, closing in on the highest level in history, right? The highest level in history. So, the guys, you would think that the market we should be almost in a depression, but we're not, because AI spend, business to business spend is saving the economy right now. Okay, it's saving the economy right now, and the problem is the consumer is only further. It's only deteriorating further, and it's hurting a lot of the other these discretionary companies. And at some point, when the AI spend stops, if there's no consumer left, the markets will have a violent reset. Okay, we also are seeing employment is resilient, but as AI takes hold, unemployment will rise as robots and agentic tools start to replace human labor. Call centers won't be, have real people there anymore. You're going to be talking to AI bots, electronic, people that don't exist. That's the future. Those jobs are going to go away, and they're already starting to have, and it's going to be more of that. Okay, so I do think we'll see unemployment rise, and of course, people are leaving the labor market because a lot of people, the demographics, the boomers are retiring, passing away. So that's also hitting the demographics. So that's kind of making the percentage look okay, but it really isn't okay. All right. It isn't really a healthy labor market still, even though the unemployment, the way we measure it. All right. Let's take a look here if there's anything else before I go into the charts. All right. I think I covered everything. Let me see if there's any shares that I may have or replies that I've. Again, I'm just looking for anything different. I want to go sometimes usually I go through these. I'm a little bit behind on it. This is an interesting chart, but I'm not going to show that because I don't believe in that yet. Let's see here. There was one I wanted to show you, but I don't think I have it yet. I'll have to find it later. But I think I covered everything I wanted to cover tonight for just kind of set the context. So we go back to our chart here. We go back to our chart. Now, the futures are red. No surprise. Now I look at the Dow Jones futures. looks like 5 waves to me. Looks like a bearish wedge. And that's usually how wedges start to break down. Okay. So that's not good, right? It's not good right here. Okay. No, I'm just pointing that out. Now we'll go to oil. Oil was in this bull flag and we broke out, obviously tonight. Now the question is, can it follow through and take out 76.23? If it can't, well, sure, it can keep going lower. And this could be just a big 1, 2, and we go lower. But if this can break out, we can really get going on the next leg higher. Okay. So with the market in general, what are we looking for? Okay. And if you're new to following me, this may be a new way of thinking about the market, but this is what I've been telling our members is basically you have three, instruments we watch where the macro is transmitted into the market, geopolitics, economic decisions, and policy goes into these three indicators, and these three indicators typically drive the market behavior, the dynamics of the market, and decide kind of where the market's trended. So the first one we talk about is the long-term bond interest rate, the bond market. We all know that because the bond market is substantially bigger than the stock market. Okay, the bond market rules. The bond market overrides the stock market any day. So if you see a contradiction, usually the stock market's wrong, but the bond market. So we watch long-term rates. Long-term rates are going higher, and they've been plugging higher. So let's take a look at, we use the 20-year. You could use the 30-year if you want to. We've been using the 20-year on our channel. And right now we were expecting this turn, and then we double correct it, and now we have the turn. So this is expected to keep grinding higher and could go as high as 5.7, 5.8. All right. We're close, if not at the psychological freakout level, where you'll start hearing more about it on TV. We have a CPI this week. So what this is telling us is the market is pricing in inflation, right? And the Federal Reserve tightening and raising rates. Okay, that's what the bond market is telling you that. So that's where we see here, and then of course the short end will follow suit. But this is what this is telling us is as this rises, growth stocks usually come under pressure, especially the Russell Index, because those small companies don't have a lot of cash and they have to borrow their money. And they have to borrow money, and the higher this goes, the more it costs to borrow. And so they don't like it. Those stocks don't like it. Also, a lot of debt was borrowed during COVID, post-COVID, and that debt has to roll over. And ironically, it's now this year, is going to have a big rollover for a lot of companies, and it couldn't happen at the worst time. Imagine what budget season is going to be like for these companies. Because if you've worked in corporate America, you have to be budget neutral or lower. They're not going to let you just increase your budget. No, so someone's going to be paying the price, and likely it's going to be jobs being lost to offset, the interest rate expense going higher for these companies. We also know as these interest rates push higher, right, it's going to be more expensive to finance, and then also the value of equities themselves, the risk-free rate of return as it goes higher, equities become, the cash flow. If you do the discounted cash flow present value calculation, they're not as valuable as they could be. So anyways, just something to think about here. So we're seeing this push higher, and then there's a huge moment that will happen. If you want to know what happens, you can subscribe and join. I won't talk about that tonight. I won't waste a lot more time on that. Now, the next indicator we use is the dollar index. Is the next one, and we use the dollar index. And right now, the dollar index, we actually did expect this to turn higher. It was a battle, and we did turn higher. We expected this. It happened to the disbelief for many, but it's happening. But it looks like it could be coming to an end soon, but not yet. So as this pushes higher, we can expect the precious metals to go down more. Okay, and those kind of instruments to be under pressure, even crypto. Okay, and even some commodities, and in fact, this could hold back oil a little bit. But at some point, we're gonna hit the end of the line, and then we could have a violent reversal, and then you could see that big move higher in gold and silver, perhaps crypto, and even emerging markets. So we're watching this. When is this turn going to happen? Okay, the perma bull had been expecting the turn from here, oh, here. So now they've realized, okay, now it's here. But the perma bear, they don't want to turn. They just want it to keep going higher. So if you really are super bearish and you want a deflationary collapse, you don't want to see the turn like I have here. I do think it's going to turn because right here you have a lower low. B and B, these two B, this lower low, and also you're below 5. This hasn't been resolved. We need that resolution, and we haven't had it. So I think no matter how high we go, we have a violent move down, and that may be the last hurrah for some of the for the market. If we can only make a marginal low, but if we can make the low that I think we'll make, then we'll have quite a big run in the metals. Okay, Japanese yen, people are watching, and that kind of somewhat relates to the dollar. Yen is a black swan in terms of policy intervention if they don't want to see their currency free fall. But it's not one of the indicators we watch primarily. We watch the dollar index, long-term rates, and of course oil. So in oil, as you can see, we do expect it to go higher, eventually hitting 200. Which we've had this target for many years on our channel. We never knew why we would get there, how we would get there, or even when. We just knew we would based on the technicals. And it looks like we could be starting to see that turn now. So that would tell us if this turn continues and we take out these levels, more than likely the war is going to get worse. Something's going to go wrong. The other thing it could tell us is nothing may go wrong with the war, but we may run out of oil. They may the spigot may run dry. Nothing might come out. You may open up the spigot, nothing's going to flow out. And you're like, no, that can't happen. Well, I just showed you the world is running out of energy. There's nothing, you're lost, 20, 30% of total energy. I mean, it's a mathematical certainty. You're going to run out unless you curtail production, you curtail your manufacturing production and usage. So something's going to give. And I think that will come to a head at least by the fall, and perhaps that will spike the oil price without anything changing. Because even if Trump and the IRCG hug and make up and everybody's happy and Israel, it's too late. You can't get the barrel from the strait to where it's actually needed to the refiner, the specific refinery that needs it, because it's certain, it takes a certain type of oil, a certain there's a process and logistics behind that. It's already too late. And that's what people don't understand. It's already too late. Even if it was just back to normal, you still have to deal with mines that have to be cleared now. You have to deal with insurance, and you have to deal with a logjam and logistics nightmare in terms of how to get everybody out and get where it needs to go wherever it's the most important area. So it's not going to be easy. Some say it could take 12 months once everything does go back to normal, and we're far from normal. So the price of oil likely will go higher at that point too. So you have these two things. So maybe the war won't get worse, perhaps, but it's still the scarcity factor could also come in, and price could also rise. Okay, so with this chart, we do expect that higher. Now, there's a big argument whether you need one more low in this or not. I don't really care whether it's one more low or not, because we don't trade these shorter ebbs and flows. We always look at the bigger picture. So if we get one more low, that's just another opportunity to buy energy stocks. Because when we get up here, it'll be too late to buy energy stocks. Although for most people, it won't be too late, because a lot of people love to chase and buy at the top. But no one, probably other than people listening to me tonight, are going to even realize They should be buying energy. I think everyone, the herd, wants to buy Meta tonight. They want to go buy, I don't know, Amazon tonight. When you really, I saw some symbols that some of you have already requested, and you're going to see some of those energy symbols you may want to go buy tonight. But no one cares about energy right now. For them, they want an instant dopamine fix to catch a little candle. But when you can just buy energy now, whether it's here or a little lower, and then in about 3 months, you won't have to do a thing. You could go on vacation. You could go play. Go your favorite, holiday, and you don't even have to worry about the market because your entry is going to be so low. And then guess what? All the chasers are going to be chasing it, and they're going to be knife fighting themselves over their position, and you won't have to worry about a thing because you got it so low. You could care less about the volatility, and that's a powerful position to be in. And so if you follow me, we try to get in those powerful positions. That's why we're able to get Palantir in the single digits, and Robinhood, and all these other all these other stocks at major lows. Right? My channel's been around since December 21, and we've gone through several market cycles since then, and we've had many lows. But unfortunately, a lot of these growth stocks aren't at lows anymore. They're already pumped. The move's already over. A lot of them are in distribution. Some may continue higher. Some probably won't. And that's what's frustrating about it. So it's hard to find opportunities, but there are opportunities out there for the future because there's always a bear market, always a bull market. So there's our stocks that are coming out of long secular bear markets. I call them, they have giga cup and handle. So there's a stock that our elite members track that we're buying that has like a 20+ year cup and handle that's about to break out that no one knows about but my members. Okay? And they know that. The elite members know that. Giving them market buy it. But no, well, I want to buy Meta. I'm like, why wouldn't you want to buy a stock coming out of a cup and handle that's been consolidating for over 20 years that's about to break out? God knows why they won't want it. So this is why people follow me and they don't leave once they join. Okay, so that's a chart on oil. Let's see where it goes tonight. But those are our 3 drivers that we use to follow the market and predict and kind of understand the market better. Okay, the direction, and try to make sense of the chaos. The great thing about our charts is we can predict using our charts the economic and geopolitical and like the future versus trying to guess the future and predict the charts, because our charts use a system that allows us to not worry about the news. And that's what's hard for people also that are new. They don't understand the way we chart in Elliott Wave. And if you follow me enough, you'll understand what I do and how I do that. But we can use the charts to predict the future and try to guess what the future can be. We don't have to actually get the future right to get our trades right, because the charts tell us what to do, and the charts will tell us what the future is probably going to be like. For example, agriculture is going to be really big. I told everyone back in March with wheat and soybeans, ag cycle is not, it's not time yet. Ag is 2027, guys. That's when the ag cycle, that's when ag is coming. But now's the time to prepare for ag cycle, agricultural cycle. Okay? That was the time to start doing it. And now we're seeing the fruits of that. We've already seen the fruits of that. Okay? Again, if your favorite influencer, guru, service was not talking about agricultural stocks and commodities back in March, then you should join and give me a try. The other thing I want to say is what it also tells us, because we knew to get in them, not because I'm like a weatherman and like, oh my God, there's going to be a drought. Oh, and I knew El Nino's coming and all. We know. Oh, there's going to be, too much sugar planted in Brazil, and there's not enough ships to carry the amount of wheat around the world. We don't need to worry about that. We just look at the chart. The charts are telling us soybeans and wheat are going to be very bullish in the future. So there's probably going to be some kind of famine in the future, some kind of pressure on agriculture in terms of demand, increased demand and lower supply. Now, as the time has gone on, We're seeing this El Nino is going to be pretty strong. That does create famine in the world. We have the war. We have not enough fertilizer, and from Iran, not enough got planted. So we already see how it's going to come together. And then once natural gas prices start to rise, the cost to operate will increase, and in more pressure. Okay, so we can use our charts to talk about what the future could look like versus having to guess what the future will look like and then back into let's go buy this. So it's very different, and of course, some people don't believe in that, and that's fine. But it's always seemed to work, and we'll continue to do that. We also had gold and silver turning down from our levels. We've done pretty well here. And we kind of have a good idea where gold and silver are going to go because we always watch the gold to silver ratio. And that doesn't, it's not at our target yet, but we have a specific target we're watching. And when this target is reached, I think we have a really good idea when silver will be at a major low, silver. So if you don't know and you're confused, again, you join, it's $5 a month. I mean, $5 is nothing, guys, to join and just listen. And even if you don't agree, you can listen. And some people do. They join because they just want to see, oh, I'll watch this ElliottWaveSage guy make a fool out of himself and I'll laugh at him on my channel. And then they find out I'm actually right and they realize, oh my gosh, I'll keep joining. So I don't really care the reason why you join. Just join and listen because I think you'll learn something. And that's what our people have been doing. Because again, everyone's like, I want silver at 58.69. Guys, we were buying silver when it was in the 20s and lower on our channel. And before I was even doing a service. When I a couple like about it was like 24 August, yeah, about August 24, July 24. One of my friends was like, I was leaving. I was like, I'm gonna, I'm going out, and he knew I did this. A lot of people that are members know me personally. They're like, what should I buy? What should I buy? And I always hate telling people what to buy, but I was like, hey, if there's one thing back then is buy silver, because I saw the wave 3 breaking, buy silver, and I was like 20, and sure enough, that was the right trade, the right call. I don't know if he did or didn't. Maybe he did and he made a lot of money. Maybe he thought I was an idiot and didn't do it, and now he feels like an idiot. But the problem is, when I say to buy things, it's not in the news. It's not going to, your favorite influencer isn't telling you. Your guru, whoever you follow, your sensei out there is probably not talking about it. And that's why people don't really like me at first, because they just don't know. And then they realize it comes true, and then they come back and follow me after that. So the other thing I want to mention is recently we talked about ARC-G breaking out, the biotech, and our elite members about a month and a half before that broke out, we watched it, we were prepared, and guess what, guys? We got into twist, TWST, well before the herd. Now everyone wants it, right? So again, we do catch some of these sector breakouts before anyone talks about it. Okay, so anyway, that's what we have going on. So if you really want to know where the market's going to go, you need to watch the rates, dollar index, and oil. If oil goes higher, the dollar index goes higher, and interest rates go higher, that's a bearish alignment across the market. The market should drop substantially and quickly. If one or two of those are moving against the market, it'll be very choppy and very erratic. And that's kind of what we've seen so far. But I think you're going to get an alignment, a bearish alignment soon on those three instruments, and that should drive that whoosh down that the market is so desperate and hasn't been able to achieve. Okay. All right, guys, let's go into your questions and go from there. So I'll go ahead and get rid of my video, and thanks again for calling in. All right, so I'll start at the top, and luckily I had a chance to prepare, so I appreciate getting these in early so I can prepare, and it saves time, and it allows me to really focus on it, so I don't have to rush, and so even though these will go quick, I actually had spent some time on these. So then first one is this United States antimony. Right now, we have a lower low here. as you can see, and that was inherently bearish. And then we have 5 up. So it gave the illusion of a major low, but the problem is our pivots have been taken out with this push down. As you can see here on the weekly cycle, right there. See how we just took that level out? Right there. So because we did that, it's correcting the whole thing again. So it's in a double correction. So price will follow suit. So I went ahead and labeled it. So it's going to have a big double correction, and it could fall. And in fact, it could fall all the way back down now to 241. And we make sense because I just showed you a chart where gold and silver are going to go down, and if the dollar index is going to rise, and if interest rates are going higher, these types of instrument, the metals, rare earths, are going down. That's what's going to happen. And we already know the rare earth ETF is breaking down as expected, as we predicted on our channel. So again, none of that's a surprise, but we have a good idea when rare earths was going to bottom. We know, and that's probably where this will bottom. Again, this is a worst case box. It may truncate, but it's going to have to now erase divergence. This is going to have to come all the way down and take out this level. That's going to happen. So I would expect more downside. Now, short term, you could still be in B. You could still be in B. So wondered if the bottom will hit $2 or lower because of REMX weakness. Anonymous, you must follow me really well. You obviously, I know you've been a long-term member, so at least I think you're the same. You may be someone different handle. Actually, I think you may be a different handle. But so if you're not a member, you must follow me because that's exactly how I would be thinking. And I just said it, REMX, right? So yes, you're right. It's going lower. Now, where is the exact level? Our members will probably be able to find it because there's one stock with a very clear setup that I think will call the bottom in that whole group of basket of stocks. So your USAR, your critical metal. If you don't know where those bottoms are, this one, you better join Elite member because we'll know. I think we'll know. I can't say we know for sure. I think we know because I'm not allowed to say. I get in trouble if I tell you I know for sure because no one knows for sure. But we have a good chance. Next is UU. So we got next is some UUUs. This is actually in a box, but I wouldn't buy it yet into the URA as in a box. It's not there yet. URA is the uranium ETF. It's likely to push lower. You see this divergence here on the 4-hour. It would be nice to have that erased on the shorter time frame. So to me, you have a big 3-wave move. You have a connector here, so 1, 2, and then you need one more push down. Here's our wave 4. Perhaps we can get to $10 or lower. But obviously, the future looks pretty good. But it's correcting, as you can see, it's correcting this whole cycle from March 2020. So it's just going to take time. It's blowing up the weekends, the people who chased it, right? And again, guys, if you're not a member or not, that's where our initial buy was right there at 554. And look what happened. It pretty much went vertical. And I know one of my friends got that set up and he made a lot of good money on that. So I'm happy. But we can get back in on it later. Archer has got a double correction. I wanted this to be the low. And I was actually ready to give the buy alert and buy it on the pullback here because look, it looks very much like 5 waves up, but it was kind of an illusion because when you look at the 4-hour, we erased divergence on that last push, so it was not an impulse. So then you made 5 waves down, and once you broke 3, then you knew it was a game over, and so now you broke this low, so it's going to double correct. So here's our account. So it's got more downside. It's got another leg down to go, and then it could find a low. EOSE. Now EOSE, if we take a step back and look, okay, we have this major head, like a left shoulder cluster, 2 humps, and here you have one. I think you'll make another one and then break down. Why do we think that? Because what we have here is 3 waves. I do not have an impulse. And guess what? We have 5 waves down. But you see that this has got massive bullish divergence right now. So what this tells me is this could have a big pump, and this could pump back up to 4, but it will be a bull trap. But it would be a nice pump. So I think if this bullish divergence can break out and break higher, you'll get this pump, just like I have. But if it does not do that and we start to break lower on this kind of compression, then it will accelerate down and then finish X. So I'd be watching for reversal in this B. NAT, I think NAT has got a really good setup for long range opportunities. So again, this is a stock that pretty much no one is talking about, but probably me tonight, or you'll hear anyone about. And of course, American Dreaming in the Philippines knows about it. Here you have a 1-2, and then you have a 1-2 and a 1-2, right? And if you can envision this, eventually, I think if we could take a time machine into the future, this will be well above $60 or higher, 10 bagger, if you have the patience to do it. So right now, though, where is it at? Is it a buy now? So we have nice 5 waves up. Now here we have 3 waves down. We hit the 4. That too could be in. Okay, it could be in. But I will say this. This right here looks like 3 waves. So what concerns me is this mess right here. Because if it's 3, we could see a flat. And then we would drop back to 469. Okay? That's what I would keep in mind. So this could be a flat. So we could see a flat and see a reversal here down like this. And of course, this would be 1, 2, 3, 4, 5. If we take out B, well, then 2 was in, and then this was some kind of 1, 2, 1, 2, 1, 2, and it's go time. I mean, it is going to pump big time. So you have to ask yourself, where do you want to start a position? It's not if you want to buy when, and then how do you want to define your risk? And that's something you'll have to think about. But I would be looking to try to build a position in this if I could, if you can get this pullback. I know our group was buying tankers. We were looking at tankers. We're seeing a strong reaction, but it's not all clear yet. They could pull back again. So let it pull back again. We can buy more. Yeah, so I really can't say any more than that on NAT. Yeah, well, that's good. I'm glad you bought it soon. He said he bought it early and getting a big dividend. Well, that's good. Next is Hive and BitDeer. Now, Hive has got a very difficult chart. I'm doing my best to look at it. I've spent a lot of time looking at this. And again, I look at this as a huge flat here and an A, B, C. And then it ended here. And now we're trying to build off of that low. But the problem is, I don't see an impulse. I see just a big 3-wave reaction off the low. Then I see another 3 waves down. I see another 3 waves up. And now that would imply another 3 waves down. So I think, again, we probably have one more swing down to finish this bigger 3-wave move. Whether we break this low or not is irrelevant to the bigger picture, because even if we break this low, my guess is it's going to whipsaw back up with the next crypto cycle like that. So I think something like this is what I'm thinking. And let me double check it's crypto. Yeah, blockchain. So I don't see a setup, an opportunity. I think this is a really tough chart to navigate as it's in the middle area. And then BitDeer is in a box, and we do see a higher high here. We do have, it looks like 5 down, and now we have 5 up, but we know it needs more upside. So it has more upside, and it looks like you have 3 waves, and it looks like it came out in 5, and it pulled back, and it may have already bottomed at 13, you know, right around 13.15, or it will go deeper to 12.36. If we break this low, then this would be 5 down. And then again, like I said, it muddies the waters, because then you have 5 down, and then it's going to turn into something very different. And I wouldn't like the setup anymore, even though, yes, I think one day it will still have a breakout. FRMI. FRMI for me, looking at still, so here we have this ABC. What we have to label this as with this push down is 5 up. And when I look at this here, it looks like we're still maybe one swing short, but typically we won't turn lower, you know, so early, right? This would be very truncated. Yes, it could be a running flat here and be finished and ready for the next leg lower, but it's unusual to do that. So I would expect more upside. But remember, you have a lower low. So whenever this does finish, whether it's here or here, I would expect more downside. It's not really something I would want to trade. Now, Cenovus Energy is in a box. And this looks like a good one. Again, if I look at it and just kind of draw this line there, it looks like it tried to break out. We made a higher high. It's been consolidating since 2011. So it's almost, say, around 15 years of consolidation. And it's trying to, you know, break out into a multi-year secular bull market. Okay. Again, everyone wants Meta. No one wants this, but I'm glad you brought it up to my attention, because we'll be talking about it in our member group. And then, guys, a lot of you guys find on this live stream great opportunities, and we've used that over the years. Like, someone out there gave us QBTS, you know, D-Wave Quantum, when it was under $1. I remember doing that chart. I also remember doing the chart on STX before it was in single digits, for crying out. Like, we have done charts on those stocks in my record. I mean, I think YouTube saves all my live streams. You go back 2 or 3 years, we did live streams on the AI memory, and we predicted all those pumps. It's just unfortunate, right? It was unfortunate I wasn't more vocal on my channel publicly about it, or I would have got credit. But I get credit with you guys, because we had those on our live stream. You guys asked me about them. And then Marvell was another one that I called on my live stream when it was ready to break out. And I think that following in the 48 hours it broke out. So again, so this is another one that gets me excited. It gets me excited. Now, here we have 3 waves down. It's in a box. Nice reaction. The problem is that I only see here is we didn't get back to the 4, and we are correct in a very large cycle. So there's always a chance for double correction. Now, what we do know is XLE did not hit its box. It truncated. XOM did not hit its box. It truncated. So sometimes that it means people bought the dip too early, and those instruments means it could double correct. So we are open to the idea of a double correction. Now, it doesn't mean it has to happen like right now, right? It doesn't mean it has to happen like right now, but it could happen later, like that. Okay? So you need to plan accordingly. But obviously, it's turned higher. It's ended the cycle. So buying it now, you put your stop at like 34.44 and see if you get the next push higher. My guess is if you can flip this black line and come back above it and hold it, it's going to break out. If it can't, you risk a double. And if you get a double, you can buy it again or add more. Okay, let's take a look at some of our next stocks. Okay, let's see here. CVE. CVE is that one. Okay, CGNT. Copper Giant Resources. Copper Giant Resources. Again, I don't know if that was there or I didn't notice it. So we can get rid of that. So we're just basically from this level, right? Because that's irrelevant. It may have been a different company back then. So here we have 5 waves up, and we pulled back, erased the divergence. So we call this done. So if I look at this, it looks like we have 3 down, 5 up, 3 down. So it looks like it wants to break out. So that's what it looks like to me. As long as you stay above 67 cents, should be good to go. FarmX is agriculture. All right, ag, bigger picture. We have a 1, 2, 3, 4, and right now, and again, I can't go to the shorter time frame, but it has a 1, 2, 1, 2. Now the thing is, this could be 1, 2, 1, 2, and I wouldn't be surprised if it is that. That's what it probably is. So I have it labeled as a 4. It's probably another 1, 2. So 1, 2, 1, 2. Now what we do know here, see how it's 3 waves? I can't say for sure it does a bigger double. Now, if it did a bigger double, then obviously that would be a 1, 2, 1, 2. And actually it would even mess up the whole view of this chart. But for right now, I want to keep it more bullish. We could still be in this too, but this is long-term investment. I want to be here like long-term. I think this is going to be okay. And then the next one, oil and gas equipment services. Again, I don't have this front part labeled, but it's a big 1, 2, major low, another 1, 2. I think we've had this for a while. We've been following it. And then, of course, we came up in 5, and now we're in a box and we reacted. So the dip by would have been right where we are. It's already reacting. So, it's time to put capital to work. And look, this is major support, like right there, depending on my exact level, all that resistant is now being tested as support. So pretty easy here, pretty easy trade. There's your wave 4s. So it has the perfect look for more, to extend from here. Ultra oil and gas equipment services, ultra sector pro fund. I mean, I don't know what's in it, but it sounds like stuff I would like to buy. This one I don't like to buy. Unless you're short, you maybe short this. But we've been talking about this for about 3 weeks on our channel. And this is guys, this is almost an abandoned ships. Will the gap fill? It might. Where is the gap? Where is the gap? Let me see here. 155. I might not see. Oh, here. Okay. So that's a short-term trade idea. Let me see. It doesn't have to. It may fill it later on this 4. But if it's going to fill it, it needs to come back and take out 144.49. If it can take that out, it's going to probably fill the gap that you're talking about. Okay. So, but right now, you have 3 swings. And then you came down, you came up and got rejected. So we would assume the 4 is in. But if it could come back and take out these levels, then yes, the gap will fill. But right now, I wouldn't count on it yet. Will it probably fill later? Yeah, probably at some point it will fill. All right. My guess is on this 4. I bet this 4. Okay, and if it fills now, then we're probably off a degree somewhere. All right, the next one is this Twilio, Take Two. I'm sorry, Take Two. Take Two Interactive. I know they've got all this bullish, news, but we don't trade on the news. Okay, we don't. Okay, we just trade on the chart, and the chart scares me personally. Okay, and again, I get the news is what it is. We've always had this as a 5. We ran out. Grand super cycle top. But we always go to the RSI to confirm it, what we're seeing. Guys, look at all this bearish divergence. Look at the RSI. It's melting down. It's losing steam. No one is buying the stock on this news. They're selling. It's a sell news. This is a top. Well, let's go to the monthly. This is horrible. Look, it's already in a bear market. Look, it's already in the bear market. So there is no reason I would ever forecast more upside in this. I would be concerned for a major meltdown. Now the quarterly needs to hold that line, but I would be very concerned right now that you're not caught up in a flat that I've shown here. And then we just come all the way back down to 170. Okay. 170 is the area where I would target it, but it could always go a little lower if it really gets a crash correction going. The ideal level for the grand super cycle bottom would be the wave 4 cluster would be back to 90 at some point. And I know, like I said, I get why I get all that bullish fundamentals, but the charts aren't reflecting it. And what it means is everyone had the same idea. They all got long the stock. They all loaded up, and there's nobody left to buy the stock because everyone guessed it would go higher because of this game. So they all on the same side of the boat. Buyers didn't show up because they've already bought the stock, and now they're panicking out. And now it's get out while the getting's good, and that's what creates the flat. A flat is a false breakout. So that's what I'm seeing here. The technicals or the momentum on the higher time frames would concern me, and I wouldn't want to be long it. Okay, now SMCI, another here. If we can survive this, we have 5 down, a connector. We had a short box here, another short box here. So you have 1, 2, 3, 4. It looks like one more low if it's going to survive. We talked about this. This stock may not survive. This chart, this may be, again, I said there'll be a handful of companies that don't survive the AI merry-go-round of, left pocket, right pocket. This may be one of them, but it may survive. It just has to finish this 5, erase divergence. So this has to come all the way down and take out all those levels. So there's got to be some panic selling, and it's still got a ways to go on the weekly. I wouldn't be surprised if this is 1, 2, 1, 2. So I would be very careful being long this right now based on this chart. Even on the shorter cycle, you have a lower low right here. This is even a 1, 2, right? 1, 2, maybe 1, 2. So this chart concerns me. SE is trying to come out. See, limited had a really deep correction. We had this big 1, 2, 1, 2, and now it seems like to me the correction's over, the cycle's done. So the 2 is done here, and now we're building out. We had a series of 1s and 2s, 1, 2, 1, 2. I think my label got messed up there. There we go. 1, 2, 1, 2, 1, 2, and now it's pushing higher in the 4s and 5s. It could easily extend. It's got a lot of room to go. And see, limited. What do these guys do? It's an internet and mobile platform company, engages in the online gaming services, e-commerce, digital service, online gaming. Okay, DraftKings, the only gaming, online gambling kind of company that I follow, is almost at a major low. So maybe this is at a major low too. All right. KXAI. This one has 5 waves, and you have 1, 2, 3, a connector, and 1, 2, 3. So this could be finished here, right? The 2 could be done. There's your 4. We could start to push higher. The cycle's over. Let's go to the 4-hour though. I always like to look at a higher time frame. Yeah, so the cycle's over. So as long as it can hold 40.39, it could start to grind higher. If it loses this, it will double correct, and then it will hit 21.69. So that's the key level. Now, if you really want to try to understand where it goes, we could try to look at that wave. The shorter cycles are always tricky, but it does see a little bit of bullish divergence. So you could probably talk yourself into this as some kind of impulse, and so that means the likelihood of it going higher is higher than it going lower. Kraft Heinz we have a problem with Kraft Heinz in most of some of these XLP sectors because XLP is likely to go lower. And we have this lower low here, this pesky lower low. But when you really zoom out and look at this chart, you have this massive dump right here. And then you also had a lower low here. You see the fractal here, and you have 5. It's the same fractal. Look what happened after that. It melted down. Guess what? It's going to do the same thing. And that's what our chart suggests will happen. So we have this huge double correction, right? We could have had that be the low, but we broke, but the structure broke down, right? Here. So it's likely to head lower. Same fractal. You have this is the child, right? And then this is the parent fractal. It's the same thing. It's going to do the same move. And this makes sense because the XLP we have going lower with Costco and all these other XLP members and Pepsi. So why would this go higher? So I don't know why it would. It probably won't. And then, of course, if interest rates and inflation take hold, and we're talking about an agricultural cycle, well, shit, that agricultural, I mean, is there raw ingredients? So these guys are going to be in a world of hurt coming up. So I would expect this move. So that's my fundamental look based on our charts, predicting the future based on the charts. And our charts tell us this could hit $14 now. $14. I would definitely, and look, it's back testing this resistance. See this resistance here? This was support. Now it was tested as resistance and it's failing. WYFI looks okay to me. White fiber, it has a higher high. It looks like a 1-2. And it looks like another 1-2, 1-2. So as long as you can hold up, stay above 31, it could break out like I have here. If you break 31, then you have only 3 waves up. It would be a flat off of this peak, and you'll have another push down. This will become an A, B, C, all the way back down here. But since you have a higher high, it will survive and go higher more than likely. So it'd be a massive shakeout of people who chased it. But I would worry if you, as long as you're above 31, it's good. If you break 31, not good, much lower. LEU here. Centrus Energy, I think it has one more swing down into our box. We have 1, 2, 3, a connector, 1, 2, 3. One more push down to complete this. Now, I was going to look, let's look and see. Divergence is not erased, so we need a capitulation type move. So what is in this? It says energy, but what is this exactly? Uranium, no wonder. It's uranium. Yes, uranium hasn't bottomed yet, so now it makes sense. So yeah, this lines up with our forecast. Guys, if you're buying uranium now, I think you're buying it a little too early. But I can be wrong, but I don't think I am. But you're close. But obviously it's on sale, right? Again, if you have a bigger picture in mind and don't care, well then shit, might as well buy it, because when we come out of this mess, it's going to be real. I think it's going to be really strong in the future, years from now, as you can see. But right now, I mean, it's not maybe right. I don't think it's ready yet. I don't think it's ready yet. I think that's the area. And here we have a pretty clear connector wave right here. Really clear one. Pretty clear one. So that's one we'll keep an eye on. Boom is in a box. I think it's bottom. Personally, I think it's bottom, but we don't have enough. We don't have enough reaction. You could just buy it here. Put your stop at the low right here at 556. It's over. You have a higher high. I mean, again, there's really some people overthink it. This is one where you overthink it, and then when it trades here, then you buy it at 28 and it's too late. So like, you either have to step up and buy it now, or just don't just delete the chart, because to me it looks like the cycle's done, right? It looks like to me the cycle's done. It's trying to break out. The monthly, that's the one. Yeah, the monthly cycle here. See that? It's already breaking out. So to me, a cycle's done. What do these guys do? What do you know? Oil services. Well, what do you know? Oil services. Isn't that what we, again, here's another great opportunity. Could this be another QBTS that in 3 years we'll say we found it at 6 when it's trading at $100? Maybe. Well, right now no one wants it, but I guess you and me and a few others. But there it is. I mean, there it is. And yeah, we'll definitely watch that. I'm looking for good small cap energy type plays like this one. So that's a good RDW. Now this also has a higher high, so it did a flat. See how it crashes because it destroys the chasers. Looking at the count, it looks like it's almost done, but perhaps a little bit lower. Okay, the count though is tricky because it can always extend. You know, the ideal area where this flat would bottom would be really at like right around A. So I don't think it's ready to bottom yet, but we all know it can do running. It can have a running flat. So it's very close. It's close. I just can't. We just don't know if it's gonna erase divergence. That's why flats are so dangerous to try to knife catch. But if you can wait and be patient, wait for the turn, then you'll know. Lithium America, again, kind of with the material, sort of, it's not really rare earth, but it kind of trades somewhat related to that sector. The money flow is similar. This is a messy chart. I see only 3 waves, and then I see like 3 and this running flat and another 3. So trying to knife down and another 3. I again, it's tough. From our system, we don't have a good beat on this chart right now. Maybe we need more data. But as of now, if I was going to try to target buying it, it would probably be right at $4 based on this chart. Based on using this extension, I believe here. There. This extension. And what do you know? It fills the gap. So that's what I would be looking for. So again, a lot of these I think are just not, it's just not the right time, but it's getting close. I think it's getting close, as you can see. Now there is another lithium play that we track in our elite group that isn't at a box yet, that's going lower. Perhaps that's a signal to time this. And we'll look at that maybe tomorrow night. Okay, because I believe, I'm not sure if this came off our list. I thought we had this on as elite. Maybe it fell off. But there is a lithium play that we follow that I know should hit a box. Is pretty clear structure to me. Okay, so I think I covered the initial asks. Let's see the new super chats that have come in. AMC and car. All right, AMC, let's take a look at that one. Oops, up here. So AMC, so this is a good lesson in trading this here, because we have 1, 2, and you can see how we never were able to make an impulse up. It just kind of extended the 5th wave of the 3rd wave, so it turned into this count. I'll just draw it here. It turned into A, B, C, and then it made a lower low. You see that? So when we talked about this, we knew there's no guarantee for a 5, right? If you get no 5, you have no trend. So this is why, I was worried about it. And so now you just have an A, B, C, and guess what? It's going lower. And that's why this move, just all it did was a big correction, and it could reassert the trend. Now, the only good thing is this looks like 3 waves, not 5. Okay? Because of that, it may be still some more upside. This looks like 5 down though. Let's look at it though here. So here, yeah, that's 5. So you have A, B, C, a bounce, and then you have another A, B, and you need another C, right? So what it could turn into here now is this. It could go W, it could go X, and it could go Y, right? Something like that. Make a bigger 3-wave move. The other possibility is it just keeps going down. The other possibility is it can break this level, right, and turn into an A, B, C. So it has a lot of options. Now, we could try to find a level. We look for the turn, and that would be about $1.06. See, it's going to, and you know the market loves to run the stops. So it probably will, my guess, again, this is what I think based on what the market makers love to do. Again, this is just my guess, is it's going to do a big whipsaw around. It's going to go A, B, and C. It's going to run these stops, and then it's going to reverse course and make a C. That's what I think. But it does have. I would be very careful going long it. Now that it has a lower low, technically in our system, we would start to short this. But given its AMC and it has been in such a long bear market, I wouldn't. There's other short opportunities than this one. Okay, now the next is car. Car, hadn't really focused on it too much since we maybe last looked at it. What is going on here? So big pump, 3 waves, down. Okay. So the key to knowing where this is going to go is this level right here. We have to look at this level. Okay, like AMC, if we break this low, it's going much lower. If we can hold it, it has a chance to go higher. Now, this looks like 5 waves, and it is. The problem is this part of this cycle here could be in 3. So let's take a look. Yeah, it's really, actually looking at it, it looks like 5 to me. So 5. So here's how I would label this. Okay. A, B, C. And my guess is, again, here, I don't like what's happening here, though. I don't like what's happening there. You know what may be is this A is here. This is probably what's happening. Okay. This right there. Now it makes sense. Because of, see how we bottomed, that was the reason, and now it comes down. This is a bearish continuation triangle until proven otherwise. So this typically means it's a connector, bearish connector. A, B, C, D, E, and then we finish the 3-wave move down. And again, it would be actually WXY now. WXY. Yeah, see, there's the low. So now it all makes sense. See, so the clue was this, to kind of back into where the right structure is. So it's this. So you need one more leg down. And then it could have a bigger pump, right? Where does it go from here? Who knows? But it's likely to fall. This shorter cycle move, again, looks like A, B, C, D, and some kind of E. Like it could be coming to an end now. So watch where you break on this consolidation. If you break down, this is the right path. If you break out, it's invalidated, and you go higher, you'll go higher, and it would be a 1-2-1-2, and then that would change things a little bit. It would probably revert back to what I had before, an ABC. But this is a huge clue to me that it's going to break lower and continue lower. One idea of a target here could be 126, 105. If it can erase divergence. Let's take a look here. And it should easily be able to do that. What's interesting is, see, it already erased divergence here, but the price made a higher high. So typically, the price eventually follows the RSI down. So that's kind of where I am with car right now, something like this. And again, the problem this has is such a huge three-wave move that's over, right? One, two, three, it's over. And again, one, two, three, that it's going to be in a consolidation phase for quite a while, but we'll have another big pump definitely. Because guess what? Everyone who shorted from here has not taken profit. Yeah, most people haven't, and they will. When they do and they get squeezed, that'll be another pump. So this should have another good pump. So the question is, where is it going to happen? This could be where it happens when this is finished. Okay. Dogecoin, I think, has just got one more low. One more low. So here's our chart on Dogecoin. So we had this WXY, WX, WXY, WX, one more swing down. Missing one more swing down. Most of the altcoins are missing one more swing down. Okay, this is one of them. This is another one. So if we don't get it, it will still won't be the right structure. It will be just 5 down. 1, 2, 3, 4, 5. And it will just become an A, B, C. So it's still, I don't want to trade it here. I'm not ready to go long. We either need to capitulate and get that last leg down, right? And of course, erase that divergence. And ideally, even on the daily, you need to take this out. So it's going to be a pretty nasty move down. Like everyone gives up, abandon ship, but that will be the capitulation move. Or it makes 5 down and it comes back up to like 9-3, this area of resistance, maybe as high as 10, and then it gets rejected again later. So it's one or the other. Okay, one or the other. While on the ASX, what's the long-term 5-year outlook? All right, let's take a look at that. Woolsworth Group. All right. All right, long-term outlook. So you go to the monthly. So right away, we just kind of take a look at this. You can see at a huge correction here. There's your 5. That's your 3, 4, 5. So you can already see, I don't even need to label it. I can just use the RSI to guide and like to help me understand where we are in the market cycle. Okay, so more than likely we have some kind of 1, 2, 3, 4, 5. And yeah, something like that. And then we had a 1, 2, right? A 1, 2 there. And that is a super cycle. And then that looks like another 1, 2. Yeah, very good. I think long term it looks great. It looks great. It looks really, really good, honestly. There's always a chance of a flat, but you have a higher high here with so yeah, to me this looks like it's ready for go time, ready for a big move out. Okay, now the problem is this little bit right here. Where could we trade right now? So let's see. Because of the divergence, we wouldn't think it's a flat off of 1, but we can go to the shorter cycle and just kind of study this a little bit more. Clearly 5 here, only 3. So on this leg here, could we be a flat off of 1? And the answer is yes. So there's a possibility. And again, I know the ASX and I know these counts. You need to watch out for this move where it does this. Okay, it can do that. The other, of course, the other more bullish conventional view is it's a 4. So you have a 1, 2, 3, 4, 5, and correct and keep going. Or it's a 1, 2, 1, 2, and it moons. But either way, I want to be long this than short it. So what does it do? Engage in the operation of stores and supermarkets in Australia, New Zealand, and India. So it's like a grocery store and food. I don't know. Maybe it's going to benefit from ag cycle. I don't know. Never heard of it. I wonder, you can't buy this on the U.S. exchange. Yeah, interesting company. It looks good to me. This looks real good. So the future, long-term 5-year outlook. I mean, once we get through this, it should be higher. But if you get run into a flat here, that's going to mess up your 5-year outlook, because my guess is if you do the flat, you'll come out of it somewhere down here. Yeah, I think you still are higher in the 5-year. So I think the 5-year outlook is higher, up, more upside. How high? I mean, we can look at prior wave threes. Here's a wave three here. So we look at the fractal, it pretty much goes vertical. So when it gets going, it can get going. So when it breaks out on a wave three, here you have a two, it'll be pretty vertical. All right. Then got another group of stocks here. Let's go through them. RXT. Let's take a look. RXT, CoreWeave. That one I have a chart done on that, so that one's easy. KRMN. VTS. Another energy, and RDW. I think we did a couple of these already. But I'll just reshare the chart. Okay, so now RTX. So looks like 5 down. Looks like a flat from here. ABC. So obviously we'll just start from the low, right? So we say that's the next cycle, right? And it's higher. It's going higher. And it looks very impulsive. 1, 2, 3, 4, 5 with divergence. So it's a very strong reaction here. A very strong reaction and a nice correction here. Now, when I look at this wave, it only looks like 3 waves. That always bothers me, because this is a new, this is a very, it's got a history of bearishness. So just kind of looking at it. Let's see if we can get 5 waves out of that. You really can't. So it's moving corrective. Okay, but it has a higher high on the corrective cycle, so it should go higher. But I wouldn't expect this thing to be like the next Microsoft. It's whenever this ends, it's going to end in a catastrophe. But for right now, I think from a trading standpoint, you're in a flat here. So probably has more downside, because you need to complete 5 waves down, and you're just not there yet. Right? 1, 2, 3, 4, 5. Right? And then there's 1, 2. I mean, I can be generous and call that 3 and 4. If I had a bullish bias, I would say, okay, it's almost done. But this could also be 1, 2, 1, 2, and it could have a substantial move down and fill the gap. That's a pretty deep push. I think it's 50-50. It could be a 1, 2, 1, 2. It could be this, but I would be looking for more downside. If it pushes higher, well, then I would call it 1, 2, 1, 2. Okay, so I think it's got a little bit, it's got more downside, and then it will should turn higher. CoreWeave, we pretty much nailed the exact top on this, and we have 3 down, a connector. We need another leg down. Another leg down. So it's missing a leg down, and that's A. So it's pretty easy chart to label. You have some kind of 1, 2, or maybe let me look at it one more time. Move this out of the way. 1, 2, 3, 4, 5. 1, 2, 3, 4. Yeah, we'll call it A, B, C. I just wanted to make sure I had it right. So looking for something like that. And this next push down should take out these lows. So you'll see a lot of panic, more than likely, because everyone got caught up in the suckers rally. And there was a lot of reasons to expect that, but it was very exciting for people who got in it. I would be careful and let this capitulate. My guess is it's probably going down to 45.26. Then it could be a buy again in this box. Once we see divergence array. So this weekly will have to go oversold. Daily will likely come all the way back down. Monthly, it's not enough data to do the monthly. So this is what we're looking for. The problem is, like we did here, this could morph into a lot of things. Just for example, on the shorter time frame, it could swing back up and we could still be in B, right? We could even try to come back up and still be in X. But the problem is the sequence isn't done yet. So this is a day trader's battleground. Obviously, all over the social media. If you're patient and wait, you'll finally get your level. And that's what we've been doing. We've pretty much avoided this trading it in this area. But I think again, 1, 2, 3, 1, 2, 3. But you see how big this B wave was? And then it still went lower. I remember when we were here, I had the same chart. We're going lower. Then this happened. And you're like, oh, ElliottWaveSage, you're an idiot. You're a dummy. It's going to go higher. And then it's like, oh, shit, it's lower. So this is what I'm saying. We need to be patient. But I can't rule out another spike like that. So it could still do that. But even if it does that, it's likely to still go lower. So I don't know. All right, KR Carmen Holdings. Almost looks like it's in a box area. Yeah, it's in an area where buyers are going to show up on the grand super cycle. So obviously the weekly is reset divergence. Now the daily, we see some bullish divergence here, probably because this wave is so long, so extended. So that's okay. So this is likely an ABC correction that's finishing or has finished. 1, 2, 3, 4, 5. And then here, 1, 2, 3, 4, 5. So something like that. Let me go back and just look at it one more time. Actually, I would label it like that. Actually, label it like this. 1, 2, 3, 4, 5. So from this low, as long as you're above 43.98, I believe the next cycle higher is starting. So I would label this complete from here. Problem is, again, only seeing a corrective move higher though. 3 connector. Let's look. Unless it's in a flat. We'll go ahead and label it and see if we can figure out if it's in a flat or not. Try to label this real quick. Three. See? It's only 3 waves. So it's a huge ABC. A huge C wave. So that's the count. It's very corrective. Normally you'll come back, even if it's going to go lower, you'll come back to the 4. That looks like 5 down though. Damn. Yeah, I think it's gonna go. I mean, it should be done, but I have a feeling it's gonna break these lows. You did not get an impulse off the low. This looks like 5 waves down. Well, I take that back. Maybe not yet. Not yet. So there's a big moment. So if you make this 5, it's highly likely it's going lower. So if you, and this looks like perhaps a triangle 4 here. If you make this 5, you know, it'll do something like this and go lower, just like I have, and go down again. Or you don't, you can hold that. And if you hold this level at 48.68, it will double higher, and then you'll get to that higher target like that. So unfortunately, I don't have better news to share because of how we came off the low. See how high the RSI bounced. So yeah, I would be very careful that this doesn't go lower. I think you'll just have to. You could either wait and see if this can break above 51, like $51. It's likely to go higher. If it breaks below 48.61, it's likely to go lower. Longer term. Of course, if it goes lower, it'll be 5 and it will rally and fall. If it goes higher, it will be 3 waves and it will just keep going. See what's going on here. So we had this energy play that had a double correction, right? 1, 2, 3. A connector. Let's get rid of some of this so we can see it again. Get rid of some of this. Okay. All right. So let's take a look. So we have a double correction. 1, 2, 3. So this bounce is still in this Y leg. So what I'm going to do is instead of a WXY, we'll change it to an ABC here and call this 5 down. But let me just look on the shorter cycle to make sure that that's okay. No, we can't do that. It's still WXY. All right. So we still would label it WXY. And that is pretty close to finishing. 1, 2, 3, connector. Let me see here. Definitely have an AB here. And then a C. And then this is a 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5. Yeah, so this is pretty much finished. So now let's just look at the larger RSI, long-term RSI. Yeah. So then my guess is it's about to finish any moment, which makes sense because most of energy is bottoming based on what we're seeing. So this just took a nasty double correction, which can happen. Sometimes things like that happen, and you just have to, understand that and follow it. Just probably no good way we can try to. Yeah, the equal leg target is 1345. We're still ways away from it. I'll draw that box. I mean, I guess it's possible to hit this 1345, but we would have to erase some divergence on the shorter time frame. We would have to have a big meltdown in this stock. It doesn't look like overnight it's doing that. Yeah, my guess is it's not coming down here. My guess is it's finished. All right, we did this red wire. It's about to finish, but I warned the person who requested it that we're not at the lows. So this could turn into a 1, 2, 1, 2, and it could crash from here. So better to wait for the cycle to end and get the exact bottom and catch a falling knife. But per this count, it should end soon. but I can't guarantee it. And typically it would go lower. So I would say you need to be very cautious here, but it should turn out of this correction. All right, AIXI. Let's take a look here. So should be, again, assuming we didn't extend, but I mean, we should be very close. Now, did we break those lows? We have not yet. I'll get that out of the way. But basically, let me go look at where we are. Yeah. It's probably done. Okay, it's probably done. 1, 2, 1, 2, 1, 1, 2, 3, 4, 3, 4, 5. Let me do this count exact. Let me just do this real quick here. So we have 1, 2, 1, 2, and then we have another 1, 2 there. 3, 4, 5, 3, A, B, C, D, E, 4. 1, 2, 3, 4, 5. And now this 4. One, 2, 3, 4, 5. Done. Now here, 1, 2, 3, 4, 5, flat off of this peak. My guess is this, 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 that. So as long as you stay above 173, should be good to go. And that would be it. So I guess you would call this like low risk, high reward bet, gamble. Okay, so good luck. I hope it works out. I mean, I'll check the RSI to see if we have any breakthroughs on the longer term RSI. Daily's turning up, and it's broken out a little bit. I like to see an elbow up. The weekly cycle. Make this not as thick. Not there. So it's not quite there yet for like confirmation, but you see overnight you're at 188. So yeah, if you could get another big push, especially if you can get back above $2, then I think you have a high degree of likelihood that lows in. You also have a higher high here. Now the risk is, okay, this is corrective. It is just going to take another leg lower. It could do that. Okay, it could do that. That's the gamble. But since you're already so close to the pivot, the low, I mean, what do you have to lose? Yes, if you break 173, it will take another leg lower, another 5 waves lower, and then you just buy it again later. But if you're right, then the pump will be pretty significant because it could pump the whole thing, right? The whole move. And we already saw like what an AMC, but this would probably, I mean, I don't know. Let me see if I can, and this is just a pure guess where it could retrace back to. I mean, even a retrace could get you back to $10. Or maybe, yeah, maybe let's draw the line. Let's draw this on a slant to cover. I hate drawing like diagonal resistance and support lines, but sometimes you can have to. So maybe $7 or something. $6, $7. All right. Now Zcash. Oh, use this count for commenting. Yeah, I thought it was the same person. I just wasn't sure. Anonymous. Okay, Zcash is caught the fever of the marketplace because it's a privacy coin. Even though I heard their developers all quit, but I'm not sure. I haven't been keeping up with it. So the chart obviously looks really bad on it, but here's the thing. We have a 1, 2, And then we have a big three-wave move up, right? And this is what I was telling people. And we have 3 down, and then we have 5 up, and then 3 down. So what I think it's going to do is go higher. Okay, I do think it's going to go higher. Now we have this 5 up here, but the problem, here's a problem I have. And again, don't ignore this. I've been playing around with it. Zcash is, and I'm going to clean this up so you can see it better. Zcash has 2 possible counts. Okay, hold on. The first count is we go higher in C, right? And then this is obviously 1, 2, right? This is the more bullish count, bullish interpretation. And of course, 1, 2, and we go higher, just like that. The other interpretation is a little different. We're still in 2. We still go higher. But this is a little different because see, this is 3 waves down. Put the X there, we're in Y. We'll go one more push, and then this is an A, B, C, and then we have a 3-wave move down here. W, X, Y. Right? In that box, again, we can try to use, could be around 53 or 116. So it's a big area. But basically a substantial decline from where we are. You know, we're talking low 100, we're talking 100 or less. So this is one view. And again, I'm saying all the altcoins look like they need another leg down. Now this would be a substantial push down if this is right. Now, I don't want to bet on the short side on this. Also, we know on the shorter cycle, you've already taken this peak out here. So that's why I had the chart earlier. I think the best chart to look at is we need to just assume the more bullish scenario. Okay, that the 2 is in here. Then you have another 1, 2 here. And then this right here is that's a flat right here. 1, 2. Yeah, that would be a flat, an ABC. And then this looks like a little run-in flat here. So then, and then we just keep grinding higher from here. And that means you can just buy it on the first 3-wave pullback because now you're in the uptrend. You're starting to go into the next real push higher. And then this one doesn't. You don't get another push down. There is no more. There is no more put because you have so many 1s and 2s. It's going to need another explosive move higher as the shorts are blown up, right? And then this turns into where you're about to go into a 3 of 3. All right, I won't label it anymore, but you get the idea. So which one is it? Place your bet. So one side is going to get blown up. And again, I don't like gambling. The only edge I give the bulls is, yes, there's a higher high right here. I give them that. Okay. But we have a risk divergence on that higher high. So there's 2 paths. We don't have a clear beat on it. Unfortunately, yes, I think longer term it will go higher. But I'd rather just I want more confirmation that yes, it's going to break out before we go to the, we start going into the thousands of dollars. Because if this breaks out, our next area, it will likely go back to, right, will be this prior all-time high and higher, probably $10,000. So it's probably go to $10,000. So, but before I want to bet on that, I want to make sure I have a clear beat on this. And right now, like I said, there's two paths, and I'm already looking at crypto needing to, at least the altcoins needing to go lower, perhaps even Bitcoin, right? That super bearish path in Bitcoin is still possible, even though it may not happen, it could still be possible. So I have to respect that. So because of that, I gotta just wait. I can't do anything here. But if we do get that last crash down for whatever reason, yeah, you want to be buying this. Hell yes, you want to be buying this. Okay, you definitely do, because obviously, like I said, I think the next target's $10,000. So, and you look back at this, and who would have known? And again, I only show this not to make people feel bad, because I have new people that watch these live streams that stumble into my channel. I did mention this to Elite members to buy it at 39, and and again, I regret not being again really forceful and bringing this to people's attention. I did show it, I did show it. I personally took the trade, but I should have obviously screamed my lungs, but no one knew it was going to do this. I didn't know. It was just like, "Oh, hey, let's give this a shot. It's a nice three-way box." I mean, no one had any idea this was going to happen. But again, if you do follow me, I do present these ideas, and sometimes the really good ones are elusive, like this one, but it was shown to those, and I know a few members did get it. I wish I was more. Oh my God, you better get this. But honestly, I had no idea it was going to do something like this. No one did. No one knew. No one knew it was going to go like this. But that's the fun of doing these things, is you just don't know. Sometimes these reactions are just incredible. But I do think right now it's tough. I would love to give a more bullish forecast, but it's just like when I look at some of these other crypto play, I just worry that it's got at least another push down, and it's going to be in this kind of pattern right now. So that's all I can really say about it right now. All right. KLX. Let's go to KLX. I'm sorry, CALX. And ZS. Oh, Z. Yeah, I haven't seen Zscaler in a while. All right. Looks like it's trying to form an inverse head and shoulders continuation pattern. All right, but that's just one thing that pops out to me looking at this chart. Now we see that peak. That's probably a four-wave triangle right here. Okay, more than likely. But let's before we get ahead of ourselves, let's take a look at what we got going on. No, maybe just a regular four-wave. It's just a four-wave. So this is just something like this, like 1, 2, 3, 4, 5. Now it could be a 1-2-1-2. I'll double check and see if I'm okay given that view, but that's pretty deep for a 4. Now see that to me, and you see how the RSI is steadily increasing, and look at the bearish divergence built in. So I think, like I said, there is some nuance in what I do. I mean, yes, it's a pretty deep pullback, but we did not, like, if this RSI was down here, maybe, or a little low, at least a little lower, but I think we'll call it a 4 for now. Yes, it could still be a 1-2-1-2. 1-2-1-2 would be more bullish, obviously. And then this looks like some kind of 1-2 here. And that looks like corrective. No, 5. It is 5. Let me look at the bottom, get a little closer look. Yeah, it is a flat here. So it is some kind of 1, 2, And then here is a 1, 2, 3, 4, 5. Yeah, so that's it. So it is 5 up. Something like that. Right? And then it's correcting. So that's probably the low right there. I mean, it can't go much lower. Connector wave is right around here. Connector wave's right around there. And see, it's in the box right now. It's turning. See the candles? It's turning. It's already turning out. So, yeah, looks like to me it's bottoming. That cycle's over. Elbowing up, breaking out. So yeah, this looks like it's ready to roll. And it's 3 of 5. Or perhaps 3 of 3. Right? And that would be 1, 2, 3, 4, 5. Now, the thing is, what does this company do? This company is cloud and software. Firms offers broadband communication access systems and software for fiber and copper-based networks that enable communication service providers to transform their network and connect their residential and business. All right, so it's like a third derivative AI hardware play. Okay, it's like third derivative. So that's probably it. So yeah, I mean, it looks like it's a buy here. I mean, in this box. Now, if we break this low, that really screws up this whole chart because then, yeah, then I would go 1, 2, 1, 2. You would have to. That would be 1, 2, and this would be another 1, 2. So in fact, it's already turned. So if you buy it, you can just put your stop at, right here at 34.85 right here. And in fact, on the shorter time frame, it's already breaking out. See that right here on that pullback? 1, 2, 3, 4. Maybe it's extended fifth wave. I just want to look at this. 1, 2, 3, 4, 5. Let's go to the 4-hour. Get rid of this thing. Yeah. So running flat here. 1, 2. So yeah, you can actually put your stop at 37.51. That's where I would put it. But it seems like it's turning, right? It's turning. Yeah, it looks like it's turning to me. 1, 2. You can't see it, but 1, 2, 3, 4, 5. It looks like a running flat. All right, Z-scaler. So what is going wrong with this company? So we have this one's a mess. So we have 5 up, big 3 up, trying to head to 35.66. Okay, so just remember, we expect this to go lower. And we came up. It looks like we did break these lows, and now we're starting to rally. So this, obviously, we know this is what we're seeing in tech. The market's desperately trying not to break down the tech stocks. This was one, and this is just a whipsaw around, right? Some kind of whipsaw around. Yeah, so now it's probably heading lower. Okay. So as long as you stay below 155.45, it should continue lower. You already have the lower low here off of this, so it's likely to fail. Now the only possibility, let me go to the 45-minute. Yeah, see, it's already, to me, it's already topped. So yeah, never mind. So I think this was just an ABC, and now it's ready for the next leg lower. So I think Z-Sal is pretty straightforward. It just took a path to destroy the short trade, right? Because the shorts probably try to short it, and then they wanted to squeeze them. And of course, the market is desperate not to break down, especially tech. So something like that. Okay, but we did break the low here. So it's likely to go lower. And once it does, it's likely to break this low. And it just creates that pressure down. Okay. Thanks again. Let's see. STM. And then MVTS. Okay. STM. All right. STM. Looks like that 4 is probably done. Yeah, we did not take that high out. So something like this. So again, we're just we just chart the waves. Something like that. So again, it's probably topping out here. And this looks like that was a box. You could have bought the dip right here. That was a dip buy. Because it looks like a flat, but it's not. It's just short of the peak. So you could probably buy that dip right there. You buy that dip right there. And then push that. And then you get it. So something like this. So it's in this top in process. There's really not much to talk about that we haven't already. It's nothing's changed. It's just, it's just gonna finish these cycles. It's just got to finish these cycles out. Now, one thing we will say though is when we make this 3, it could be a big 3 wave, so it may not make this 5. That's the flat risk, right? That would be a flat risk on the larger cycle. The grand super cycle. Okay, Amcor has the same problem. Amcor. Okay, this could still be a flat on the grand super cycle. And if it is, and you make that last push, this will come all the way back down to the bottom. None of this will happen. None of this will happen. The problem is we don't know that. And remember, flats are because the market got ahead of the fundamental news and people chased. So if enough people chased at the top and the fundamentals were all hype and no substance, this will crash just like it did here, all the way back down. Amcor is in the same situation right now. Amcor, same chart almost. So but again, once this 3, so you got to understand, there's no guarantee for this 5. Just so you know, no guarantee. And of course, if you're really bullish, you want to see it extend, right? You want a 1-2. You want this to be 1-2 as well, and just moon. It can do that. There's a possibility of that. We've seen that with stocks like Micron. But then, but again, that's the outlier. This is like the more conventional view. The problem is what happens here. What's the market going to do here? Okay, is the problem. Also, if we don't hold this support or pivot at 65.81, then it may be doing the flat, and we're missing data, because again, it's only 1 tick away, right? So you need to, this one's got to be watched carefully. But it's, as long as you stay above that 65.81, you should get this 5, and then after that, it's going to be up to the market, and it's going to be up to the SMH and all these other high flyers. All right, MVTS, what's going on here? All right, this one's kind of a mess. Looks like we made 5, and then we made 3, and then it failed. So it did its own flat. So this one, same thing. This one did the flat. So this is what I was trying to say, is sometimes you get these flats, and then yeah, they just don't work out. Things just don't work out sometimes, and that's the tough part of trading flats. So this obviously made a flat off of this peak here, and that's the problem sometimes that emerges. So we'll go ahead and label it as a flat so you can see where it's going. All right, let's take a look at what we got going on. All right, so we put this, get rid of this there. Okay. Probably something. Yeah, it's in. See, it's moving in 3 waves. Let's take a look here. 1, 2, 3, 4, 5. Let me see how we topped on the RSI. Yeah, we see how we made one last little peak. That's interesting to me. Obviously correcting the whole thing. Yeah, I still have to call it a flat, even though the problem I have with it is this last little wick right there. But we probably could look at that. Yeah, I'm just kind of taking a look. I wonder if this turned out down here. Yeah, see how the if it erased divergence there. So that was the low. Price made a higher high here though. So real again, sometimes TradingView doesn't give us the data. Like, well, I'll go to a different time. So this is the low, and this is why our chart's messed up. Is we have 5 waves up here, so it's almost like we're missing some data. But yeah, I looking at it, maybe it's a triangle. Maybe that's what it is. That's what it is. That's why we're not seeing it. It's a triangle. It's got to be a triangle. Okay, so W, X, Y. It has no other way of doing it unless it, and then let me see if it's a W, X, Y or an ABC. 1, 2, 3. Yeah, W, X, Y. So this would be a triangle. We come up in Y, and then we have A, B, C right there. But then you have this extra wick. That's the problem here. So get rid of that. I guess we have 5 up then. 1, 2, 3, 4, 5. In 3, down, in 3, and 3. Yeah. We have to label it this way. Again, I won't ignore the data just because it doesn't fit. I mean, we'll have to just use the data we have and label it. So that can't be a flat. So it's just a normal correction of 5. So there's a connector. And your box is 1207. It's a big box. And it's bottoming already. So it's truncating. So larger time frame, we'll get rid of some of this so we can see it better. All right. So larger time frame, we have a 1, 2, 1, 2. We have a higher high. Again, could it be 3 waves up? No, I don't think so. No. So it's a 1, 2, 1, 2. It's actually pretty bullish on the bigger picture. Just it got crushed. It just crushed. This whole wave just got crushed. And I mean, technically it could go lower. And it looks like an ABC correction. It's finished. So yeah, so that's what it looks like to me. It obviously went deep enough. The thing is, it could always bounce and go lower though, so we know that. But it looks finished, so it should, I guess, should go higher from here. Could it go to new high, all-time highs? It's possible, but it's also possible it could fail and double correct too. Right? It could do that and come back down again. Okay, so one or the other. So that's what I'd be looking for. All right. And my guess is it's already bottoming here. I'm starting this rally. I mean, what happened? Wonder why it fell so dramatically. Oh, patent infringement lawsuit. Well, maybe they'll win the lawsuit or something, right? Maybe this chart suggests they're going to win the lawsuit. And people are scared they're going to lose. All right. AMLIF. Another lithium play. So we still have lithium going lower, rare earths going lower. All right, so we'll label it from this low. We do see the bullish divergence, so we do see it's kind of impulsive off of the low. So you've got 1, 2, 1, 2, 3, 4. Yeah, 3, 4, 5, something like that. And then a connector, and then yeah, the box is we're not so you're not going to get a box. You're just going to have to wait. And you see up bullish divergence still, although not on the daily. You're still in the bear market, so I'd still be careful because we have other lithium related plays that still are going lower. They're not done yet, so they may trade together. Perhaps this one won't, but it's at a point. I mean, if it can go higher from here, then yes, it's bottomed. It's done. But again, most of the other lithium plays need to go lower that I have tracked. So it's likely to go lower with the sector, but maybe it won't. So if I was trading it here, if you could see it push higher, then this cycle's done. So yeah, then you have a low. It's you have a low, and it's going to start building new upside from here. If it but if it fails, it will start to fade. And once you fade, then it will break this low. And it could easily come back and retest those lows. And that's more than likely what I see. But it looks to me like you have 5 up. Let me see if you have a bigger bearish connector. It's possible. So here, this could also, so again, that's why this low could break. Because it could be a bigger bearish connector. Like that. And then go lower. So as of now, you need a little bit more upside, I think, to have more confidence the correction's over, but clearly you're still in the correction. So you're still in the correction, okay? You're still in the correction, okay? All right, let's take a look at, and the reason we go from the low is the data, this data is not really relevant. We just trade from where it's trending in the direction of the trend until it changes. So yeah, I mean, as long as you once you end the correction, yeah, it will have a big move higher. It'll have a big move higher, but it's still in the correction, depending on, still in the correction. All right, guys. So I think I got through everyone's super chat. It was a good live stream, a lot of energy on the live stream. Let me just kind of go through some comments and I'll tell you why. All right, just kind of looking through. Yeah, XLF could be at a wave 5 peak of a larger cycle. Yeah, the crude, yeah, wedge breakout, we're tracking that. So gold and silver gets its wave 5. So wave 5, I mean, I think you mean lower, because higher we actually haven't seen the wave 3 yet. So gold and silver are going to be much higher years from now, but short term we still think gold and silver has more downside because the dollar index is moving higher still. So we don't do seasonality. It's when the dollar index finds its peak, gold and silver are ready to roll, and also when the gold and silver ratio hits our target area. So we don't really care about seasonality. We don't care about you know, you know, you know how much supply, and oh, we don't care about the central banks buying it. We don't get into that. We just look at the charts. The charts tell us it's still under pressure, gold and silver, until the dollar index peaks, and it dollar index is in an uptrend right now because the Federal Reserve is threatening higher and raising interest rates because of inflation. All right, that's what they're saying. Now we also know the gold and silver, the dollar index could play a trick on everyone and drop and then whipsaw back up later, and that would pump gold and silver short term and then tank it later this fall. That's why you have to be a member. If you're confused about what I'm saying, I talk about this in my videos. You can watch my member videos and understand that. So anyway, X XSJ. I'm not familiar with that ETF. What is XSJ ETF? Let me see. XSJ. XSJ ETF is consumer staples or something. I don't know. Yeah, I mean, consumer staples, XLP, I worry is going to take another leg down. Here's what I think about demand destruction in oil at 200, because demand destruction will happen, but we're in a different situation than COVID, because COVID, the world shut down in terms of everyone wasn't able to travel. Even the governments shut down, essentially shut down most of their, essential services. And, even no matter how rich you were supposed to not travel. This is different because if oil goes higher this time, the inelastic demand of oil in terms of the wealthy, the well-to-do, they get to still travel, and guess what? They'll pay $200 in oil. They won't care because they have a lot of money. And also, of course, governments will use spend the money they need to run their militaries and everything. So there's this inelastic demand component. And so yes, I mean demand destruction would happen from most of the consumer base, and also the lower, not most people and most companies will throttle back their usage, but it won't be like COVID where you know what I mean. So that's the scary part about the $200 oil. What really scares me is there's not enough demand destruction to pull it back, almost like you see with housing prices, right? Everyone assumed interest rates were so high, housing would collapse because of what? Demand destruction. But what we found was prices were resilient and sticky because the number of transactions went down, the market went into equilibrium, and the few buyers that bought, they didn't really care about the house. They were buying higher prices, could care less. They could afford the interest rate, and a lot of people weren't going to sell because they had the lower rate. So the market just came to an equilibrium at the current price interest rate balance. Interest rate and price came into balance. The same thing could happen with oil. There could be enough demand destruction to stop putting pressure on prices from going higher to really collapse demand, and then there may not be enough demand destroyed because there's still this inelastic portion, so it may just come to a new normal, and that would really suck. And then you would be forced to add supply, and that's where the oil services come in, and then there'll be panic to get drilling again. You better remember there's been no capex spend by the oil companies. They've been holding back. They've been good stewards. Well, they won't be able to take advantage of high prices, so they'll be pumping, and then we'll be back to the 1990s again, and there'll be oversupply, and then prices will fall again. So that's my thinking on oil. So I wouldn't be so sure about an instant crash in prices. I think oil could be a little more, it may be different up at that level, but I do believe that's the target I have, and then it will slowly go down from there for years and years and years as supply catches up. That's what I think. Some people though don't believe that. They believe it'll go even higher than 200. Some people believe it'll go to 400. Now, if it goes to something like that, 400 or 500, I think then you get then you get a depression, like a 2009, right? A 2009 situation. right? Because you need it to because the oil price moved in proportion to where it was. The amount, if you extrapolate the same proportion of increase it did from like from the late 90s to 2007, you would have to move oil not to 200 but to like 4 or 500 to create the same pain that we felt back then, because obviously the market is everything's inflated more. So that's also something to think about. Housing, if we look at the real estate sector, we see a whipsaw price action. We see it falling as interest rates rise again a little further. That will put pressure on prices to come back down. But then I do see there'll be a brief period where interest rates will fall. And then they may fall substantially from where they would be. And then they reverse course and moon and go significantly higher. And then I believe housing prices will collapse. So I think housing prices is gonna. This is my guess on housing. They're gonna slightly fade this year, going into this year, this winter. I think you're gonna see prices dip. Rates are gonna keep going higher, and then there's gonna be a change in direction in long-term rates. And I think that's going to be an easing of financial conditions. Perhaps the Fed panics and lowers rates tremendously, and that's going to pump housing, and I think that's the last pump in housing. And then it's gonna rise, and everyone's gonna get excited. People are gonna come, it's gonna be that. And then at some point, the larger trend in rates will reassert itself, and then rates will go to that crisis level, 10% on the long end, and then I believe that will be the sovereign debt crisis the U.S. faces, and then housing will just collapse at that point. Housing price, because there's no way the market can sustain that kind of interest rate. That's what my guess is. Okay, but we'll see. But we do look at that on our group, the real estate sector. I think it's in a whipsaw type on the higher time frame, not the short. We're used to whipsaw in the shorter time frame in big cap tech right now. Housing's going to be a whipsaw in the larger time frame before it trends again. So I don't think housing's going to go back to normal for a long time. It's going to be all erratic. These rates are going to be really erratic for a little bit. The only way I get that wrong is if we do not get those emergency rate cuts from the Fed later. If they just keep pushing rates higher and I'm wrong, then I think housing will just melt down at that point. Okay. Let me see LAC. I'll check LAC again. Yeah, I have it at 470. So I'm not sure what chart you're looking at. So maybe trading, it's another trade in view glitch. You can send me a different symbol if you want me to do something different. And if not, I'm not sure what's going on because I don't see any other LAC. I mean, I type in LAC, I don't see any other LACs. I mean, I get LAC gold, LAC lit. Yeah, see, so I don't know. I guess it's a trade in view problem. All right. Well, while you think about that, ooh, looks like we took a turn for the worse here. Again, I'm not able to look at the news right now. I'll take a peek at the news and see what may have happened in the last few minutes while we were talking. Oh, U.S. is hitting Iranian energy infrastructure. Oh, so now it's on. Okay, so let's go look at the price of oil. It's still like, boy, the market is so complacent, guys. Can you believe? I mean, geez. Yeah, this is so mispriced. Yeah, natural gas is frustrating, but it'll come out. It will have its day. It will have its day. Okay. Well, it looks like war is escalating. I mean, if we're going after energy infrastructure, Iran is already threatened to attack pipelines and the refineries in Saudi Arabia, in the other countries. Yeah, I'm just looking through the news and see. So I think that's what made the markets turn, take a little nosedive there. So looks like infrastructure is now being targeted by the United States, so they've escalated. R r.aldridge898, if you want to just email me at admin@ewsage.com, a different symbol. I'll put it in the video. I know you're a member, so I could just squeeze it in there. Let me see what membership level you are. Yeah, it's strange. I'm not sure. It's TradingView. Sometimes TradingView, I'm noticing more and more glitches with TradingView. Literally, you can go to different time frames and see different data, different wicks, and different. So I don't know how it reconciles its data. I know it's not the best trading platform for aggregating all the trading information out there, but it's what we use because it's easy to use for me, and it's cheap. So. Yeah, you can just send me another symbol or something. I'll do it for you. All right. I'm gonna get going, guys. Thanks again. Have a good night. And definitely think about joining and subscribing if you enjoyed what you heard tonight, because this is what I cover all every day with my members after the market closes. I'll post videos. All right, guys.